What's up everybody, Tom here with another video. In today's video, we're talking about everything to do with the stock markets right now. And while this particular candle might scare you, it doesn't mean that we need to be scared just yet in the Nasdaq and other pairs. Throughout this video, we'll be doing our technical analysis levels for the S&P 500, Nasdaq, Bitcoin, GME, Tesla, and others to really talk about these treasury yields and to understand whether it matters over the medium to long term or whether this is just a blip in the bigger bull run we've seen recently. Let's take a look together. Stay tuned. Alright guys, well as we mentioned, the Nasdaq was the one moving yesterday. Heat map of the S&P 500 shows us this. Things like Tesla were down almost 7%, Apple 3.39%, Amazon down heavily, Nvidia, AMD, really nothing was safe from the tech bust. It was banks that did better. JP Morgan and Bank of America both up pretty heavily, and even oil was down. Let's have a look at these sectors and indices first. The indices, it was the Nasdaq and the Russell that were down heavily. SP 500 was drawn down through the tech, and of course the Dow with less tech in it actually was only down 0.46%. When we look at these sectors, 3% down here for the tech, almost 4% down at one point for energy, and every other sector, some were actually up. Some things were actually up here. So it's not all a sea of red. It's just specifically targeted to two major sectors yesterday, and they were tech and energy. Quick reminder for everyone before we get into the technical analysis that, of course, Friday is the quadruple witching hour. Make sure you have some kind of options expiration calendar and you understand these types of events. And what a quadruple witching hour does is it creates strange market movements. And you could say that yesterday was a strange market movement. We usually see increased trading activity and huge volumes on witching days and the day before witching days, which of course can lead to gains in the market, or it can lead to what we saw yesterday, which was a pretty big decline in the market. So we're positioned at a point of support on the Nasdaq, and this is going to be such an important Friday close trading session. The most important one that we have seen almost in a week's time. So basically, it's all about where does this Friday Nasdaq close for our next impulsive move. So we'll get stuck into the technical analysis now, and we'll start with the dollar index because since the Jay Powell comments, we've been trapped within an area. We instantly sold off. We went down to 91.34, and that really signified risk is back on in the markets. Now we've seen a rally in the dollar index, the US dollar, and that rally has pushed it back up to 91.85. Now, if it closes above 91.96, what does that mean? Potentially it's risk off. When the dollar strengthens, it usually means the stock market is weakening, or at least could be an early indicator for the stock market to be weakening. So dollar index trapped between a zone. I definitely think that these two levels are highly important for Forex and commodity traders out there that are interested, and also stock market traders. You should know where the dollar index is at all points. So the good news and the bad news for these treasury yields. Look, everyone's concerned about them, and I see heaps of comments. Oh, it's blowing up. This is bad for tech, etc., etc. The reality is that I don't think it's a problem unless we breach this 1.96 zone and 2 zone. If you're a medium to longer term investor, this is just a blip in the horizon at this point, which gives you potential opportunities for your strong conviction stocks. The question is though, what happens next for these yields? Well, I do think they're going to rise to the 1.96. It makes logical sense. We closed above that 1.42 area. We've been on the steady rise to the 1.96. But just remember, we're now sitting at 1.74, and the Nasdaq is not even as low as it was when we were sitting at 1.42. So you've got to put some of those things in perspective. Remember, stimulus checks have been coming out for the US. People have been getting them this week. And what does Wall Street like to do? It preys on the retail community. So by doing this kind of scare tactic, it's quite effective. If we take a look at the daily here, we scroll down into the 4-hour, you'll notice that it did actually drop off a little bit after that initial spike yesterday. But I'm not too concerned about the Nasdaq unless it closes underneath the key zone. So continue to watch the treasury yields. We will be doing that in our live sessions. So definitely subscribe and hit the like button if you enjoy our live sessions and you want to come along to them. But yeah, I'll be watching this through the Friday pre-market into the open. I think it's an important one to have on your charts. US 10 years. This is the US 10Y on TradingView. Definitely check it out. So US 10 years went up, and then of course Bitcoin has been suffering over the last little bit. So yesterday we talked about this specific level, which was the 57,000-ish level. It bounced down to it, found some initial buying pressure, and then during the point of recording this video, it looks like we're really putting test underneath this 57,000. Now, due to this quadruple witching event, due to the stimulus checks and all of the market manipulation that's going on, I'd say that this week has been less technical than usual. You've got some big whipsaws both ways. But you can notice here the Bitcoin is at a critical zone. It has to support the 57,000 to continue its upwards momentum. So if you cannot get, let's say, a wick rejection here or something big on at least the 4-hour, I'm going to start getting worried about Bitcoin returning back down to that 52,000 support. Continue to watch it. We'll cover it during the live sessions. It is a little bit tough right now to read through the charts. And as of the recording of this, I'm actually seeing, I started a few minutes ago, Bitcoin and other cryptos have all dropped. Another quick warning for people that are trading cryptos right now, take the profit off when you're hitting key resistances, guys, especially when you think about the percentage moves. I'm just going to load ADA straight up here. We talked about this extensively in the live stream. 1.47 was reached. You've got to think about it as market capitalization compared to its other peers. So Cardano and DOT, they were both running up together. If you're not familiar with these, it doesn't matter. It's still a really good lesson. One was reached. So that is the $1 was reached, and it was found buying pressure. We saw that with little momentum ticks off that. Great buy, well done. Coinbase has said that they were going to allow it. That created a hype event, and the hype event went straight into the 1.47. Now, several people were saying, what do you think about this yesterday, Tom? And I said, look, you went up 50% almost in 24 hours. Is that sustainable during not an incredible bull run across all other coins? And I said, I don't believe it would be. That being said, at some point, you might be able to get through 1.47, but it just wasn't there then. So it's a really good lesson of trying to consider how much did we go up 50% in 24 hours? Is that sustainable with every other coin where it is and the market capitalization? Most likely not. And that is what we saw. Let's take a look at gold. Gold's incredibly muddled and muddy. It broke through the 1740. This was really a very good indicator that it's not working that technically at the moment. And it's because of this quadruple witching event, the Fed, and all of this stimulus money coming in. I believe there's a lot of shenanigans in the markets right now, a lot of shenanigans. We have resistances that were meant to be met by support here at 1740. It wasn't. It ended up coming down to the trend line, and that's what's holding so far. But just gold is super hard to trade, and so is silver. So we won't even be covering silver today. It's just too hard to trade. Oil busted down through something that's been holding very, very strong for a while, and that's been the 20 exponential moving average. This level has been so good throughout all of this bull run. We hit our 65, which was our target over the longer term, and I've been disinterested in oil since then. But with that flash crash that came through yesterday, I'm starting to get more interested. And certainly for people that are looking at maybe getting some more value down into the oil, $60 or around where it trades right now, $59.73, previous supports, 50 exponential moving average, a decent pullback of the overall large move. It's starting to look a bit tastier. And what I would do is break down to the smaller time frames, look for some consolidation, double bottoms, those types of things, and then you can make better informed decisions. Be careful on oil, but that was at least a significant enough pullback to say, okay, maybe now we can find some value in stocks and some value in oil plays in their general recovery throughout the economy. Tesla traders, do you have to be concerned? Well, the good news is that actually the Nasdaq futures are stabilizing above the 12,800. And this is trading very similarly to the Nasdaq. So look, I had 660 as the support. It closed at 653. Because we didn't get underneath that last low that was reached the other day, I don't think this is incredibly negative yet, and everything could still be in play. And that was that we had the left shoulder, the head, and the right shoulder. When we take a look at the Nasdaq, you'll notice it's a very similar type of event. So 720 remains the key resistance, and around this area, as long as it bulls tomorrow in the Friday session, it should be okay. So for Tesla holders, you just want this level to hold. You hope that people will be buying with their ears pinned back, I guess they say. And then if that is happening and it moves back up to the 720, once you get through 720, you can actually be assured that much better things are coming. We move towards the 800, the 780. There's not much left-hand side structure there, and things return back to normal. This is always what happens. There's a lot of shakeouts occurring, quadruple witching, huge amounts of volume, huge amounts of manipulation. It's nasty out there. So hopefully the support holds through the trading sessions. So let's now talk about AMC and GME just quickly with the AMC traders. $14 was closed against. You'll notice here that it has done that before and it did it again. So it didn't show us that it can hold above 14 yet, but I do believe that if we can get a good first 30-minute session through AMC on the Friday, that there's a chance that you can go towards that 16 level. For the GME traders, 200 flat was held, and at least it found support there. 200 flat, very important, and of course, any closure underneath that pushes into the 173. So 173 is the major final point, I think, for GME. Under that, it's not going to be pretty. And 200 is the first point. It's kind of like Nasdaq yesterday. We had 13,000 or 12,750, 12,800. And that's what we ended up reaching. So yes, GME, check it out. Dial in on the 15-minute timeframes and look for a break above this little bit of a downtrend. This will signify that all of these series of lower highs are over and it's ready to move to the next level. Let's now go over to the Nasdaq, and we'll start here just with the futures so you can see the recovery coming through. 12,827. So there is recovery here, and you notice even that little line we drew live yesterday, see what happened. Lots and lots and lots of 13,000, support, resistance, heaps of fights between the bulls and the bears. And there's actually a little day trade that you could have done in here towards the short. But I'm very glad that it just went straight here and then bang, started finding buying pressure. And that plays into our longer term goals, which is we find support here, we find, of course, the head here, and then support here and create the right shoulder of the Nasdaq. It all comes down to this. Let's go down to the actual Nasdaq itself. Let's go down to the 4 hour of the Nasdaq, and you will notice it's the exact same setup. There are so many things that make this the best play if it can work out. And that is that you take the actual distance from the head to the neckline, you extrapolate that out, it goes well over. There's huge amounts, but also that you take this resistance. It's just so strong. That 13,300 is so strong. So once this closes above, and I'm going to have alerts here, I'll be letting you guys know during the live and during these videos when this happens. 13,300 close exposes 13.6, and then it exposes 14 and 444. If it closes underneath this level though, this 12,750, 12,800 for the Friday, unfortunately for bulls in the market, especially the Nasdaq market, you will be looking at a decline back down into these lows. It's almost inevitable that it then would crash back through to the 12,200s. And that's a sad, but it's the reality. If the quadruple witching doesn't work out and it can't hold that 12,750 to 12,800 and it closes below at any point, it will signify movements down to the 12,200, and then there'll be some buying pressure here. Again, you've got to make the next decisions. There are a couple of things or scenarios that I could see playing out. One, 10-year treasuries rise to 1.96 incredibly quickly. If that occurs, yes, the Nasdaq will fall down here and be found with support. When that treasury yield though hits 1.96, let's say we were hitting the support at the same point, boom, it's all good. Now, if the treasury yield goes down now, which is what I think will happen, I think it'll stabilize here for a few days, this would bounce, it would move up, and it might move through. Now, let's say that occurs, or even it bounces here and then it starts going up. Let's say we're above this 13,300 and the treasury yield goes to 1.96. Will that put a lot of downward pressure on the market? Yes. But just like last time, we're at a way higher treasury yield point, yet we're still higher than we were during the flash crash or the crash correction or whatever you want to call it during the other points. So it just puts in perspective that even if the price action goes up and those treasury yields keep coming along with it, as they come along, as long as the price action's holding these key supports, it's all okay. So I'm focusing on the Nasdaq today because this is the most important chart on the stock markets right now. It really, really is. look at the inverse head and shoulders, look at this support. For dip buys, for people that are looking at high conviction plays, this is technically a support that should be paid attention to. S&P 500, much harder to read. Look, it's 39.15. Aftermarket, it's 39.25. 3,900 has been a very good level of support and resistance for it. If that gets reached during the session on Friday, I expect some pickup, and I probably expect the market to open around 39.30. 39.30 has been a very critical point. So I'd expect some recovery through the Asian and European early sessions, and for us to be sitting around 39.30 on the open, the 20 moving average effectively on the 4 hour for the SPX. So it really is as simple as that, guys. It's all about the Nasdaq right now, the Treasury yields, and the dollar index. Follow all those charts. They are important to understand and look at. 12,800 must be held. I think the Nasdaq's more important than the S&P in terms of your analysis. Maybe even get the Russell out, which we will be doing during our live stream. If you enjoy the video, please subscribe. Of course, hit that like button. And thank you so much again, guys. 50,000 was achieved. It's a massive celebration for me, and here's to the road to 100,000. We do have that t-shirt competition coming, and I will make an announcement over the weekend on the channel so that if people want to enter it, they can. Thanks so much. See you soon. Bye for now.